The purpose of this video is to clarify one thing surrounding the income requirements for loan modification review once you start to transition off of your COVID forbearance plan. If you are a subscriber to my page, welcome back, good to see you. If not, make sure you subscribe, like my videos, and always feel free to let me know if you have a comment or a question. I do truly love hearing from you guys, and you guys end up getting good videos when you comment or question because you ask me a question and then I record a video. So it helps you out. If you have a question, many other people across the country have a question too, so let me know what that is. Okay, so right now, if you are one of these homeowners who has FHA, Fannie Mae, Freddie Mac, the VA, or USDA, you might be trying to transition off of your COVID forbearance plan and resume making your regular mortgage payments. And so most of these investors I just mentioned have good loan modification programs where they can kind of take you through this review to see if they can get you on an affordable payment where you don't have to pay the amount that you missed during your forbearance plan and you can just resume making affordable payments. Loan modifications right now are good options for people who need the payment to be a little bit less than it was prior to COVID. If you want more information around all the options available to you for your transition, watch my particular waterfall videos based on each investor where I kind of go through each of the options. But what I'm trying to address in this video is one thing related to the income requirement for the loan modification reviews. So for most of the investors I just mentioned, the modification reviews are streamlined. That was part of kind of the new guidelines announced at the end of August. Streamlined means that you shouldn't have to submit a document package if you are one of these COVID homeowners that's trying to transition off of it. So back in the old days, pre-COVID, anybody who wanted to apply for a loan modification would need to submit a document package with a bunch of income information. How much you make, your pay stubs, your bank statements, if you get Social Security or award letters, and the banks would run income calculations to make sure that you can afford staying on a loan modification. This does apply to some people who don't have these government-backed investors or who aren't a COVID homeowner, but for you guys who are COVID homeowners out there, you shouldn't have to submit a full document package. But what I do want to clarify is when you are on the phone with your bank requesting the streamlined loan modification option, the bank, some of the servicers are asking you verbally over the phone what your monthly income is. Now, that doesn't mean that you necessarily have to send in pay stubs. It doesn't mean that they're going to make you send in the document package. But for some of the servicers, it is seeming that they are able to verbally ask you how much you bring in each month. And so you need to be prepared for that question, and you need to answer that question correctly so that you stand the best shot at getting approved for your loan modification. So just because the process is streamlined doesn't mean that they're not going to ask you that question, okay? The general rule is that you want your income to be about 3 times what your mortgage payment is. That's just the general rule for affordability, right? If you're spending 1/3 of your household income every month on a mortgage payment, that means that you have enough money to pay all of your utilities, food, your general household expenses, and it typically proves to the bank that it provides a little bit of a cushion for you to cover unforeseen expenses. Now, what you need to do is understand, what you're bringing in and be prepared for that question when the bank asks you that question. What you don't want to do is provide some sort of income number that is below what your original mortgage payment was. You don't want to, if your mortgage payment was $2,000, even if you're trying to get that payment lowered, if you tell them that you're bringing in $1,500 a month, the underwriters might put a pause on the review and be able to speak with you and kind of cause more problems if they think that you can't afford it. And so while the process is streamlined and it's supposed to be easy, it's not quite as easy as just calling them and saying, give me a modification. Banks are asking right now sometimes for verbal income information, and you want to make sure you're providing them a number that sets you up for a good shot at success. So before you do the verbal phone call with your bank, you're going to want to think about what you're bringing in and have your number ready and kind of make sure it sets you up for a good shot at success. I have another video posted around the other questions that you can expect the banks to give you when you call in to do your forbearance transition. This video is really just about preparing you for the possibility that they will ask you what the household income is. If you have contributors contributing money, if you have somebody who's not on the loan contributing money, and you're just giving a verbal number, you can add all of that income together and just give them the good verbal number that they're looking for. Good luck.